We about to cover a real touchy topic today. Is the housing market going to crash? And to be honest, nobody has a crystal ball on what's going to happen. And it's really hard to get a true and real answer. You know why? Because the people that you have to ask, like the quote unquote professionals, a lot of them are either going to lie to you or have some ulterior motive. Like they're either trying to sell you a course, trying to sell you some gold, trying to sell you a book, trying to sell you some Bitcoin, or of course, trying to sell you a house. Like if you ask a realtor if the housing market is going to crash, they're just going to say housing prices never go down and you can just buy a house and just ride it up the next 10, 20 years and just make a ton of money. If you ask a lender, is the housing market going to crash? You already know what they're going to tell you. They're going to tell you can just buy a house now and refinance later, which is the number one thing I hate. Please do not get me started on lenders because they are on my bad list right now. And that's a nice way of saying it. And it's just like the American public can never get a true and straightforward answer on anything, like with the drones or what's going on with the economy. We can never just get a real straightforward answer. Show us the data and we can decide for ourselves. But today I'm gonna give you the data and the facts because at the end of it, although I'm a realtor, most of you all I'm not gonna sell a house to, so it doesn't really matter whether you have an opinion on the housing market crashing or not. I just believe in giving you the truth and taking a genius look at the market. And so that's what we're gonna do today. And by the way, for those of you who are wondering, like, what is defined as a market crash? A housing market crash is defined by a drop in prices of at least 20%. Let's get into it.
I haven't said this before on TikTok, but I think the housing market could crash. I'm not a conspiracy theorist. In fact, I've been a real estate agent for 7.5 years who's yelled that the housing market's not going to crash. But I've had 3 conversations with separate people that have led me to the conclusion that we may be setting ourselves up to be on this Jenga tower that is set to fall. One, I had a conversation with a mortgage broker who said that for the first time nationally, we are now seeing a surplus in inventory month over month that match 2018, 2019, and beginning parts of 2020, which means inventory is growing. And it's not getting eaten up the moment it hits the market. So we have growing supply. There's growing inventory. That was one of the first things that caused 2008. But how is that going to cause homeowners who currently have a home to have to move? Have you heard of what's going on in Florida? Because if you haven't, let me inform you. Florida has had a bunch of insurance companies come out and say we are no longer covering your home because of hurricane. And due to that very fact, there's a lot of people who no longer carry home insurance and are being forced to move because the home insurance they could carry is so much more expensive. And the flood insurance premiums have gone boko crazy. And if you don't believe me, go to Florida on Zillow and see how many properties are listed, how long they've been on. Because I have a client trying to move from to Delaware, from Clearwater, Florida, and their home has been on the market aggressively priced for 3.5 months now with 0 showings.
So let me just address a couple of things there. Number one, yes, inventory has exploded, right? Here in Metro Atlanta, we had right about less than like 10,000 homes for sale, like during the pandemic or whatever. And right now here in Metro Atlanta, and I'm talking about a 29 county region, right? We have nearly 25,000 homes for sale, which is like 2.5 times, or I don't know, it's over double what it was before. So he's absolutely right. Like the inventory is crazy. It's getting extremely hard for people to sell houses. I also have clients that are looking to sell and then move into another home. Selling the house is just one part of it. I'm not going to spoil my commentary for the rest of the video, but yeah, I just wanted to touch on that part about the inventory because the inventory is like everything is on clearance, believe it or not.
None. But the other 49 states should take note because mortgage companies were able to come in and say, you need home insurance. They've said this for a long time, but the home insurance companies are like, hey, we're not going to give it to you. So what did the homeowners do? They have to go to some third party, some other person, and they're like, we'll cover you for a premium. And what happens when people can't afford that premium? They are forced to move. And when no one wants to buy the home they're trying to move out of, you start to see a crash, like what happened in 2008. Second, third, and fourth conversations I had were with insurance office owners. They were the ones who were able to tell me the exact specifications around what's about to...
All right, that's enough about insurance, but you know, gosh, insurance, such a wonderful topic to talk about right now. Doesn't everybody just love insurance? But yeah, so this gentleman here, which is, if he's from Florida, like he is definitely like the ideal prototype for a Florida realtor. I don't mean that in a bad way. He just screams out Florida when he's talking. But inventory is a major problem. I mean, real estate and just any other market is based on supply and demand. So I guess if we are keeping track or keeping score, like for housing crash versus not housing crash, inventory is one of those categories which definitely points to housing prices coming down. We're not going to say crash yet, but if people aren't buying the houses that are on the market, then what are you as a seller supposed to do? Now, I'll give you a little bit of a nugget of information. When I list houses, we're usually already pricing it below market value. So we get rid of our houses really fast. On average, our last listing hit the market and was gone in like, 6 days? So I suspect that a lot of these realtors are still selling the clients or the sellers the dream that they can get the same price as 2022. And you ain't gonna get it.
It's sad because there are people in America that will never make $1 million in their lifetime. So how could they afford $1 million home?
What's the price point that you're looking at?
So regretfully, and I never saw this in a million years, it's the $400,000 range.
Which is literally like the median home price here in America, $400K.
You are a homeowner already.
Yes.
And to think that your next step is just slightly out of reach because the housing market is so crazy.
Yes.
How does that make you feel?
It is upsetting.
And her driving force? Her daughter's future. Adania is 14 and is a freshman at a private Catholic high school 30 minutes away from their South Chicago home. And that home, Trotter bought in an all-cash offer for $45,000.
Hold up, this lady bought the house for $45,000. I wonder what she's gonna sell that house for. Because at the end of the day, like, people who are in a situation like this, like, come on, like, what do they call it? Like being in the catbird seat or whatever they call it. But you are in a prime position to do exactly what you need to do. Now, you're an electrical engineer. You bought your last house for cash for $45,000. I mean, even if you sell the house for like $250,000, right? You're walking away with $250,000 cash. You're an electrical engineer. You probably should be able to afford your next house, no problem. Of course, you're going to have a mortgage, which she is not used to. But come on, like. But on the flip side, for those of you who have not bought a house, I'm sure you can identify with what's going on here. She's a mother. She has a daughter that attends private school, and private school is not cheap. I know because my daughter, who is about to turn 3, is about to start private school next year, and my niece, who is 5, has been in private school for 2 years already, and she's out of LA. So I know it isn't cheap, but I don't know. Let's see what else happens.
In 2020.
Like I said, all packed up with nowhere to go.
We joined as they toured a few homes with Shannon. The first one was a 3-bedroom, 2-bath home listed for $340,000.
That's crazy.
Next up, a 5-bedroom, 3-bath home listed for over $459,000.
As you walked
That's
through
crazy.
this house, were you imagining
Or 60.
yourself living here?
I'm so glad you asked that question because actually I did. Some of the other ones, not so much.
Her agent, well, just keeping a keen eye on the market. And while she doesn't dismiss Harris's plan to build 3 million new housing units if
That ain't gonna happen.
elected, she thinks in Chicago.
Technically, it could have already happened because she's the vice president already right now. So if she wanted to do that, they could already did that. But we're not going to go down that road.
Chicago, that plan misses the mark.
We have tons of inventory throughout Chicagoland. We have hundreds of properties on auction. We have properties that are abandoned.
While Trump has yet to lay out specifics on a plan for housing, the Republican National Party this year pledged to promote home ownership through tax incentives. Harris outlined a plan to help.
All right, I can't do any more of the politics right now. I'm over it. I'm sure the average American is too. Now, they mentioned the agent was keeping a keen eye on the market. Listen, if you are buying a house or you a realtor, I need you to listen real close on what you should be doing right now, okay? What you should be doing is you should be negotiating, right? That's what you should be doing because these sellers are starting to panic. Their houses are sitting on the market a lot longer than they thought they would. And if you have a realtor that's just keeping a keen eye on the market, just looking, that's pretty much just saying somebody is standing there and watching it happen while you're in a panicking situation, then they ain't the right person for you. You can ask any of my clients when it comes to making an offer. I just met with a client yesterday and I literally did data analysis on the market for her. I literally took the last like 600 properties that sold in that zip code and we ran through it. What is the average list price per square foot? How long do these houses usually sit on the market? What is the ratio of original list price to sales price so we can come up with the offer? And what we were able to come up with yesterday is that this house it's a good price based on what we've seen selling, but we probably can get at least like 3 to 4% off of it. And then we're going to go even lower than that, because I always believe in any negotiation, you should get a no first, because if you don't ask for enough and get a no, I mean, you left money on the table.
Did you guys know that Michael Burry, the legendary investor that predicted the 2008 housing market crash, sold half of his entire portfolio in Q3 of 2024? Burry cut 90% of all of his banking stocks. This is what his portfolio looked like at the end of the first quarter of 2024. Now, this is exactly what he sold. As you can see, in consumer discretionary, he went down 30%. In financials, he sold 90%. Energy, he took everything off the table.
Let me just add something really quickly here, because I know some of you all don't like check the markets every single day. So I have nothing against Michael Burry. I think that The Big Short is a really good movie to watch. So if you need something to put on your watch list, right? Need something to watch that's going to kind of identify with what we're looking at here, go watch that movie, right? Y'all send me some money, Netflix or whoever has that movie, and make sure your boy get paid for that. But my point is that it's very hard to time the market, because Michael Burry, I remember reading an article, I can't remember whether it was last year, I think it was last year, 2023, that he put $1 billion worth of shorts on the S&P 500. And that is when the S&P 500 was right at about like 4,700. Like, it's now over 6,000. And so it's really tough to time the market. And sometimes when things don't make sense, they just happen to make sense for everybody else that's making all the money, and just not for anybody who's thinking logically.
And the same thing with industrials. Now, the question is, what does he know that we don't know? Because if he's selling all the stocks, obviously he's not bullish on the market. Obviously, he thinks something is going to happen. And a 50% decrease is absurd. We're talking about $50 million. Every single time we had a presidential elections and that the Federal Reserve cut interest rates, we have a major market fall highlighted by the green lines. This is a presidential election. This pink line is them cutting interest rates, major market fall. Same thing happened right here, cutting interest rates, green line, major market fall, 59% decrease in stocks. Same thing happened here, COVID, that was a big fall, 44%. We just had the same exact thing happen. I think he's bearish because of the Federal Reserve.
So that's talking more about the stock market crashing, but the two kind of really do go hand in hand, because if the stock market crashes, that means that people are going to be losing jobs. And if people are losing jobs, that means that people are going to be losing houses, etc. The only problem with this is like post 2008. I'm not sure if you all follow, like, what do they call it? Keynesian economics or whatever. But anytime that something like starts to go down, they just print money and prop it right back up, because technically the housing market should have crashed like in 2020, but what do? They drop interest rates to zero. They drop mortgage interest rates to like 2.5%, and then the housing market just went berserk. So I don't know. I mean, when you least expect it, or I guess when you most expect things to go down, then something comes out of left field, something being the Federal Reserve or the powers that be, and they say, nope, you, the small person, you're not going to get a break. We're going to prop these markets right back up, and good luck keeping up.
Have you noticed you don't see many for sale signs? Homes on the market, homes for sale, inventory's crazy low all around the country. The reason why is because people can't afford their own home. I'm having more and more people. My name's Wayne Turner. I've been in the real estate business for 30 years, and I'm just having more and more people.
Crazy low. When is this recorded? This year? In September? Okay, let's hear what this guy has to say. Remember, I told you it's hard to get a real answer. He's talking about inventory is crazy low. I don't know what this guy's been. He's been in the market so long, he's forgot how to use the internet.
People tell me, Wayne, if I had to buy my house right now, couldn't afford the payment.
That's true.
Not at 6.5% interest. So what has happened is, you got to know this. For 11 years, mortgage rates never were over 5%, 11 years. What'd that do? A lot of people bought houses. I sold thousands of houses, and people have amazing interest rates, 2.75, 3%. You've probably got a low rate if you're watching this video. Most people do. For 11 years,
and they're double now.
Sold per year, on average about 6 million in the United States. So literally, you think about that, 6 million homes a year. Multiply that by 11. You see how many homes right now have literally less than a 5% rate? Not only less than a 5% rate, most of them have less than a 4% rate.
Yeah.
The point I'm trying to make is, even if you took, for example, right now today, you sold your $350,000 house, and you had $100,000 in equity. If you took $100,000 and put down on a $500,000 house at 6.5% interest, with principal, interest, taxes, and insurance, you're still going to be paying about $4,000 a month. And most people living in a $350,000 house have a payment of about $2,000 a month. So you see, people are kind of stuck.
And there you have it, folks. But Genius Crew, y'all got to forgive me because I really get into this topic and I forgot to give y'all the thing that y'all want. Genius Crew, you know what time it is. Drop the track. Welcome back, welcome back, welcome back. If this is your first time here with the Genius Crew, I am the Market Genius. This is a wonderful channel that covers stocks, housing, news, anything you need to know about life. Like, we're going to give you the real of what's going on out here. And of course, we're going to cover the data. So make sure that you like, subscribe, share this information. We love to see you here. We are building something great over here. We're building a Genius Crew, right? A community of like-minded individuals who are not going to be fooled by what the mainstream media is putting out here, by what these janky realtors are putting out here. Like, we're going to think for ourselves. We're going to figure things out. And of course, we are going to prosper for our family. So if you want to join the movement, please go ahead, subscribe, and we're going to keep on rolling here. But before we keep rolling, let's look at some of the numbers. Let's look at some of the data, right? We've heard that inventory is really high and really low. What's the truth on that? Well, let's take a look. And so for good old Georgia, right? We got the numbers here in front of you. And I'm not going to bore you with some of this data because I know everybody does not live in the great state of Georgia. But here you see it on your screen. Residential inventory, 22,933 homes, representing a 44% increase compared to last year, right? So I don't know where you live, but a 44% increase is a huge jump. Now, why is that such a huge jump, and why is that such a signal for what could be coming with the housing market? Well, the total amount of residential units sold, which is like right here on this row, it only jumped 2%. So we have 44% increase in the amount of homes available, but only at 2%. Just a tiny drop in the bucket, 2% increase in the amount of homes sold. Now, just to give you just a real graphic analysis, right? Graphic analysis. If you go back to, and wow, my numbers were off. If you go back to the bottom of like the pandemic, right? The amount of active listings that we had were 6,900. 6,900. So call it 7,000 for round numbers. So we went from 7,000 homes available just a little bit over 3 years ago to almost 23,000 homes available now. So you're talking about almost, it's like a triple what we had available, triple the homes available, and 1% or 2% more in sales. But if that's not enough, we're going to let's look at the nationwide trend of what's going on here in the market. Now, I strongly encourage that you understand how to read charts like these. That way, nobody can pull the wool over your eyes, and you'll understand what you're looking at when it comes to like understanding financial data. This chart here is what's called a housing affordability index. And as you can see, and as you can feel, houses were the most affordable in the beginning of 2021, and they have like fell off, boop, 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 all the way down here. So clearly houses are not affordable. This chart here is the Case-Shiller Home Price Index, right? Which just talks about It's a price index for like when homes that are bought resell. What's the difference between the price of when they were sold to when they were purchased? It's just another way of telling you how home prices are going, which you already know. But you see like a little bit of disturbance up here, all right? And you see that has started to curl over. Will we go back above that? Only time will tell. But with so much inventory, we'll see what happens. And then we got here mortgage rates, right? Mortgage interest rates here. Oh, it looks like we have candles here, right? If you don't understand what these mean, and like I said, we have a course that's available. I ain't trying to sell you anything, all right? I don't care if you buy the course. If you want to know how things work, fine. You can go learn on your own. You can learn in my course. It's completely up to you. But I have it nice and well organized for you to pick it up in my course. It's $100. Like I said, look at it as a way of supporting the Genius Crew, right? If you want to get it, great. If not, totally fine. Just keep watching the videos and, I'm sure you'll pick it up on your own. But as you can see, mortgage interest rates have gone from, I'm going to pull out my ruler here, right? Mortgage rates have gone from the low here, which really isn't a low, but that's like a reversal point. I mean, they went up 145% in, 3 years. So, I mean, that's not bad. I'm sure everybody can afford that. Housing supply also is going up significantly to where there was a lot of houses available back in 2020. That fell off a cliff, and then we're right back up here as well. So the people who are saying the inventory is still low, I don't know what they're smoking. But yeah, you don't really want to listen to them, right? Median U.S. home price is right at about $407,000. And we're going to talk about that really briefly, or coming up. We're going to talk about that because I think that that's really telling of what's going to happen in the housing market. Inventory, like I said, is up, highest that it's been in about 4 to 5 years, depending on where you live. It might have been the highest that it's been in 20 years. It just really depends on where you live. And I think that's enough for the charts, but you need to learn what these say or what they read so you can become a more informed person.
I got bad news for you. It might be harder to get a home in a market crash than it is now. Because what people who say, I can't wait for a housing crash, don't understand is that a housing crash will most likely be preceded or succeeded by an economic crash and high unemployment. High unemployment, not only are you unlikely to have a job or at the meaningful level that you're at, but here's something that a lot of younger people don't know. Banks tighten lending. Because let me tell you something, unless you are sitting on cash waiting to buy a house, it may be even more difficult to buy a house in a
lending's already tight because you can't qualify for what these houses cost. So maybe it could get worse, maybe not. I don't know.
Housing crash than it is now, which would piss you off because you'll feel like you missed the ball. You think it's difficult now? Wait until the housing market is crashed. These banks, who are the ones who sell these loans or pass out these loans, are sitting on hundreds of billions of dollars in ticking time bombs that they are less likely to say, yeah, let me add another one to that pile. And people who are in their 20s don't have robust, long credit histories that the bank can look at and say, okay, you own a business, you've been paying your car and your credit cards on time for this many years, and you've got a good record, and you've got equity, you've got everything like this, we'll do it. So now you've got a threefold problem. Unemployment, which means you may not have money, okay? Being young,
or a job,
which means credit, the bank is going to look for is not really there. And
sucks to be young.
Lending. Right now they're offering Zillow's 1% down and with 2% grant you pay back from the sale of the house at high valuations, right? But if the market comes down and rates aren't back to zero, and even if they are, it's going to be even more difficult. So it's never as simple as just like I was saying, it's never as simple as one of these two things.
He makes some really good points there, and this is some of the things that I have had conversations with people about. Is like, okay, if the housing market crash and everything burns down, who's to say that your house is not going to be affected? Like, metaphorically speaking, if everything else goes down around you, are you going to be prepared to seize the opportunity, which we talked about in one of our last videos. But if you watch that, then you should be prepared to seize the opportunity. Now, let's get into my analysis of it, right? Because I've pretty much had enough of TikTok right now, and I really want to dive into some of the things that make sense to me as a realtor, as somebody who speaks with hundreds of people, hundreds of families on a weekly basis about their upcoming housing plans. And that's people who are young, old, buying, selling, first-time home buyer, last-time home buyer, all of the above, right? You are watching this video because you want to get a true answer, or you want your answer confirmed on whether the housing market will crash or not. So, a couple of things that I want to point out before we get out of here. And I think that the most simple answer is always the best answer, right? So let's take a look at how much homes cost, how much you have to pay or make to afford the average home, and then what the average family makes here in the United States. And then I think we're gonna have the answer that we're looking for on what's possibly coming in the future. So we're gonna look at the numbers here, all right? So we talked about before that the average house is going to cost, or the median U.S. home price is right at about $407,000. So we're going to put 407 right here. All right. And we also looked at the mortgage rate was like a 6.6 on average. You can get it lower if you buy down points. We're just going to go with just the average number here. Okay. Now, just looking at the numbers here, I didn't tweak too much. Let me just give you a little background on how we arrived here, right? So if you make $140,000 per year, you can buy a $407,000 home, and your monthly payment will be approximately $3,031 per month. Now, that assumes a couple of things, right? Number one, it assumes that your property tax is only about 1%. Depending on where you live, that could be higher. Comment below if you are a homeowner, if you know the property tax rate for your current area. And that also assumes that homeowners insurance is only about 0.5%, which I've seen much higher numbers, all right? So probably look at this as like one of the better case scenarios. And on top of that, it also assumes that you have $40,000 cash on hand. So $130,000 household income, or applicant income, should I say, $407,000, $3,000 a month. Now, is that realistic for the average American? I know it's kind of a rhetorical question, but if we're trying to get to the bottom of what's going to happen with housing prices in the future, we had to ask these questions. So we took a look in Google. No, this isn't Google. This is Bing. Your Bing, the ting man. We took a look at Bing, and the median household income is $80,610. All right. So that already means that half, really more than half, because you needed, in the example we just did, you needed $130,000 to be able to purchase the median U.S. priced home, and the median household income is $80,000. So $50,000 difference, which ultimately ends up breaking to about 70%-ish more than what the median U.S. family brings in to be able to buy the median U.S. house. So coming back over, let's adjust the annual income back down to $80,000, and let's see what kind of house that the average family can afford. $80,000, and this is keeping everything else the same. Well, that price drops all the way to $230,000, all right? And so based on the data, right? Based on the data, we've heard some from the streets of TikTok. We've heard some from news, Michael Burry, and my take on what's going to happen with the housing market is that if mortgage interest rates don't come down, if people don't start making more money, if homeowners insurance and other types of things like property taxes don't come down, then yes, I think you definitely could see a drop of more than 20% in housing prices. It's just math, folks. If the average person can only afford, or the average household that makes $80,000 with the numbers that we just looked at, can only afford a house for $230,000, then median housing prices at $400,000, they just don't make any sense. But I have no crystal ball on exactly what's going to happen. I think that you should look at your own financial situation and decide what's best for you. Now, just because housing prices come down 20%, that doesn't mean that they won't go up 40 or 50% again, and you'll end up still making money and making a good investment. So the purpose of this video is not to tell you, hey, you should or shouldn't buy a house right now. That's your business. That's between you and your realtor, unfortunately. If it's not me, that's between y'all, right? But I just think that the way that the numbers are lined up, the way that we have so much inventory on the market right now, and the way that these interest rates are set up, then yes, it is not unfair to expect housing prices at some point to drop by at least or over 20%. Now, what that looks for you, that's another topic for another video, because if housing prices drop 20%, that's probably going to mean that there is a lot of problems in the United States economy, which may mean that even though they drop 20%, you may also be unemployed or facing some type of hardships. But I hope this video really did explain a lot for you when it comes to looking at the United States housing market and actually getting you some clarity from the data on, is the housing market going to crash? I appreciate everybody watching. Please make sure that you subscribe to this channel. Join the Genius Crew, right? We got plenty of things coming, like cool merch, right? I'm not a designer. I don't care about making luxury items. I just want you to be reminded where you are going with your future and with your family. And for some reason, these headphones just keep getting stuck onto me when I am talking and I'm not listening to anything. So I think I've had enough, and I hope that you have gained some information from this video. This is the Genius Crew, or excuse me, this is the Market Genius. I'm out. Peace.